Good afternoon, viewers. My name is Imran. I'm a UK and international tax specialist. The purpose of this video to explain the taxation of dividend income. This topic is related to UK taxes, highly useful for ACCA, ACA, and CTA students. Also helpful for individual receiving dividend income and they wish to understand the technique of calculating tax for the dividend income. Taxation of dividend. So keep dividends separate in income tax calculation. For instance, if in exam they give it to you that individual receive wages and they have interest income and the dividend income, so put each source in different column. Or if they give you an exam that individual receive trading income, interest income, and dividend income, again you put them in separate columns. So start with the non-saving income and then saving income interest and then the dividend income. The reason is because there is a different tax rate applies. So when you keep them separate, you can easily track which the source and then apply the relevant rate. If you mix them up, it's going to be very hard for you unless you are a really strong tax professional and or using any software, for example. So the dividend allowance is for 2022-23. So the dividend allowance of 2000 applies to dividend income within the dividend allowance tax at 0%. It's just simple way. There's a dividend allowance of £2,000 available for 2022-23. This dividend allowance has been reduced now to £1,000 and the government is thinking to reduce it to nil. So if there's a dividend allowance, you just simply tax it at 0%. So the dividend allowance of 2000 is available now is 1000 to whether individual is basic, higher or additional rate taxpayer. Remember, it's different than the personal saving allowance where if you are a basic rate taxpayer, you get a saving allowance of 1000. For higher rate is reduced to 500 and then for additional rate no saving allowance available. However, this dividend allowance is available regardless the tax rate the individual paying tax at. So the dividend allowance is not an exemption. Remember, it's not an exemption or deduction in working out your taxable income. It's simply tax at 0%. So the income must be included in the tax computation and it will utilize the individual basic or higher rate band as normal. Tax rate for the dividend income for 2022-23. If you're still studying the ACCA exam in March, so the tax table will be based on 2022 and 23. So any dividend in excess of the dividend allowance, so first the dividend allowance tax at 0%, then any excess above this dividend allowance will be taxed at 8.75%. Any dividend income in excess of the basic rate limit but below the higher rate limit is charged at 33.75. Any dividend income in excess of higher rate limit is charged at the dividend additional rate of 39.35. So remember, for wages, the rates are for 20%, 40%, and 45. For the interest is the same, 0% because of some allowances, then 20%, 40, and 45. Dividend rate is different, that's why we keep it in a separate column. Here is example. Simon's salary is 35,000, dividend of 20,000. Remember, make this two column because there's only two sources of income. If there would be any interest income, make sure you make a separate column. So that would be goes after non-saving income and then the dividend income. So put the salary in one column, dividend in the second column. There are no deductions, just bring the figure down as it is. So net income less the personal allowance is usually set against non-saving income and priority. So that gives you a taxable income. So if you add them up together, it is more than 37,700. This indicates that Simon is paying tax at higher rates. So it means any dividend income falling in the higher rate, make sure you apply higher rate tax. So for example, here is so non-saving income falls in the basic rate. So you multiply by 20%, then the dividend allowance of 2,000 available. So you multiply or apply 0% tax. and then the dividend still falling, some part of the dividend. If you look at the notes on the right hand side, so 37,700 is the basic limit. It's been used by 2,000 what used by dividend allowance minus this non-saving income as well. So there's still a part of the dividend falls under the basic rate band. So then you multiply 8.75%. Then the dividend above the basic rate limit tax at the rate of 33.75. So below is the explanation. All non-saving income after deduction of personal allowance falls within the basic rate band. The remainder of the basic rate band utilized by 2,000 dividend allowance. The next 13,000 worth dividend will be taxed at the basic rate because it's still under the basic rate band. The remaining dividend income tax at the rate of 33.75% because that dividend income, the income has been pushed to, because this dividend income pushed the rate to 33.75 because it's falling in higher rate band. Additional point to remember. Now, we always saying is, or we usually saying is that the personal allowance should be set against non-saving income. However, if the situation is like this, the way it's mentioned here, where net non-saving income is more than the basic rate band, but less than the total of the basic rate band plus the personal allowance, and that individual also receive a dividend income of more than 2,000, so is of an amount such that the taxpayer is a higher rate taxpayer. So the personal allowance should be allocated to non-saving income to ensure that the taxable non-saving income is equal to basic rate band. It means you don't need to utilize, or you don't have to utilize in full this personal allowance. Utilize it to a level that it's bring the non-saving income to 37,700. Any personal allowance left, utilize against the dividend income if this is the scenario. So remember, we're saying is the balance of personal allowance should be allocated to dividend income. This ensures that the dividend allowance obtain relief at highest possible rate. If the dividend income is not sufficient to utilize the dividend allowance and the balance of the personal allowance, then the excess personal allowance should also be allocated to non-saving income. Here's the example. Simon received the following income: salary of 47,000, dividend of 5,000. So the salary, remember, as we say, is the old way that we usually utilize the personal allowance against non-saving income. So utilize it against non-saving income. So you will have taxable income and then the dividend income. So if you add them up together, it gives you 39,430. That is after utilizing personal allowance. So the tax due will be the non-saving income taxed at the rate of 20% because it falls a basic rate. Then the dividend allowance 2,000 is available. So the 2,000 worth dividend will be taxed at 0%. Then some dividends still falling under the basic rate. Okay, so that would be taxed at the rate of 8.75. And then the dividend which pushed to higher rate band, that would be taxed at the rate of 33.75. So the total tax due is 7,580. Remember this figure. Now, if what we should do is remember that is like as we said in the slide, is what will happen if we utilize this personal allowance partly against non-saving income and partly against dividend income. Would we have any tax advantage? Let's see. The same scenario, Simon's salary is less than 37,700. So salary is 47,000 and the dividend is 5,000. Well, firstly, we calculate the liability if we allocate the personal allowance in partly against non-saving income. So remember, salary is 47,000. So use the personal allowance to a limit that bring the salary to the basic rate, which is 37,700. However, the way I use is I brought the net taxable income from the salary 37,430. Then what I did is I use personal allowance 3,000 what personal allowance against the dividend income. This left me with a dividend income of 2,000, which will be covered by the dividend allowance. It means no tax on dividend income. So the rest is only this 37,430 would be taxed at the rate of 20%. So obviously you can see my tax rate or my tax liability here is a bit lower than we calculated previously. So by allocating personal allowance this way, we have saved some tax. Not big tax saving, however, we save some tax. What's happened is if you fall in the exam, if there is a, as I say, is if there are more than two sources of income, so there is a non-saving income, for example, salary, you have interest income, and then the dividend income. Again, remember we say is put each source in a different column. So salary in one column, saving income in the second column, dividend income in third column, because there are different rules apply. Okay, so utilize the personal allowance against salary as usual, so that will give you a taxable income. So Simon has taxable income of 38,430. So the higher rate would apply. So here is how you calculating. So remember that salary would be taxed at the rate of 20%. Remember that because Simon is we calculated after using the personal allowance, we calculated that Simon paid tax at the higher rate. So this would restrict individual saving allowance, personal saving allowance to 500. So on that you apply rate of 0%. Then on the remaining saving income you multiply by 20% because that saving falls in the basic rate. Then because of the dividend allowance, 2,000 dividend is taxed at 0%. And then still the sum of the dividend income fall in the basic rate band. I just draw a line 37,700. So it's give you a clue, like for example the way I done it, if you do it in exam, then you will not miss any points. And then the remaining dividends still tax at the rate of 33.75% because that falls in the higher rate. So the total tax liability is 5,898 pounds. Here's another example. Simon has the following income: a salary of 135,000, interest income is 6,000, dividend income of 11,000. Now Simon, you can see, is Simon paying tax at almost the additional rate, because if you add up all his income is 152,000. So it's for 2022-23 that would be classed as paying tax at additional rate. So Simon tax liability. So start, remember, there is no personal allowance. Because in exam you don't have to waste time and keep writing. You just start is based on the level of income. There's no personal allowance. Look at his level of income is way more than 100,000. So the Simon, so start with, don't give any personal allowance because of based on the level of income. So the non-saving income multiplied by 20%. Then the other part of his non-saving income falls in the 40% band. Okay. Then the saving income, because of he's paying tax at additional rate, so there's no personal saving allowance. It's a 0% saving allowance. So the saving income of 6,000 will be taxed at 40%. Then the dividend allowance is available. As I say, is the dividend allowance of 2,000 is available regardless of the level of income or regardless at what rate he's paying tax. Then the rest of the dividend income still falls under higher rate, and then the remaining dividend tax at additional rate. So the tax liability would be, so Simon is additional rate taxpayer, hence no personal saving allowance. Because of his level of income, there is no personal allowance either. So there's two things: personal saving allowance or personal allowance. Personal saving allowance is 1,000 reduced to 500, and there's none for individual paying tax at additional rate. Personal allowance is not available for individual having income in excess of 125,000 something, because if your income goes over 100,000, this personal allowance diminish for every £2 income above 100,000, your personal allowance reduced by £1. So once you reach to 125,000 something, your personal allowance disappear, or you don't get personal allowance. Here's another example. Simon with a salary of 9,000, interest income of 8,000, dividend income of 2,570. Now, Simon is definitely eligible for personal allowance, 12,570. In addition to this, he will be eligible for dividend allowance of £2,000. He will be also eligible for personal saving allowance of £1,000. In addition, based on his level of income, he will be also eligible for starting rate of the saving, which is £5,000. So if you wish to know more about this one, you can watch my other videos. So now you need to allocate the personal allowance in a way that the Simon can get benefit from dividend allowance, personal saving allowance, and pay less amount of tax. So here, so remember, this individual is eligible to have a starting rate for the savings. So the first 5,000 saving would be taxed at the rate of 0%. Then because of the saving allowance is 1,000, the dividend allowance is 2,000, and the remaining dividend would be just taxed at 8.75%. So remember to allocate personal allowance in a way to preserve saving starter allowance plus the saving allowance and the dividend allowance. Additional points to remember. Non-saving and non-dividend income is treated as the lowest part of individual income. So saving income, the middle part, where individual also receive dividend income, then dividend income is the highest part. The effect of this ordering on the availability of the starting rate for saving is that if individual has any other income, non-saving and non-dividend, this needs to be taken in account in determining whether individual saving income falls below the starting rate limit. So remember, if you wish to know more about the starting rate limit, you need to visit. I have uploaded a video on taxation of interest income. So that would help you to understand this technique. So but right now we're discussing here is the taxation of dividend income. Well, if you do have any question or queries, write me a comment or two. Okay, I'm happy to answer your queries. You can subscribe for more. I will be making more videos on the UK taxation, financial reporting, financial management, performance management. Thanks for watching. I'm wishing you a very good day.